Ever get that feeling, where you think, man, I'd love my investments to work a bit smarter, maybe use some of those advanced strategies?
Yeah, but without becoming a full-time trader yourself.
Exactly. The thought alone is just, oh, it's a lot. So today we're diving into something that might just scratch that itch.
Managed account services.
That's it. And how they're trying to bring some pretty sophisticated trading power to, well, everyday investors like you.
Right. We've got some really interesting information here, looking at companies like Theta Ventures Ltd., for example.
And how they're providing access to automated trading systems.
It's a space with a lot of potential, definitely. But as our sources make really clear, it's also one where you absolutely need to understand the details, the nuances.
Couldn't agree more. Because for you listening in, maybe you want to get a solid handle on this stuff without, getting totally lost in the financial jargon.
This deep dive is kind of your shortcut.
That's the plan. We're going to explore what these managed accounts actually are, what the potential upsides could be for your investments.
And really importantly, the potential risks. The bumps in the road you need to watch out for.
Yeah. So our mission today is basically to pull out the core insights from the material we have, give you a clear picture of these managed account services,
So you can figure out if it's something that, fits with your goals.
and your comfort level with risk. That's key.
Okay, so maybe let's start at the beginning. What exactly are we talking about with these managed account services?
Okay, let's unpack that. At its core, it's about you, the investor, being able to use automated trading systems, strategies.
On your own brokerage account, right? The one you already have.
Exactly. Think of it like, well, maybe like plugging in a really smart piece of software to handle some trading decisions.
And Faida Ventures Ltd. is one example of a company offering this kind of thing.
Correct. And a really crucial point right from the start. You still hold the reins. You keep control of your account.
Including the master password. That stays with you.
Absolutely. That doesn't get handed over.
What's really interesting here is the technology aspect. It feels like a big leap for retail investors.
It really does. The sources emphasize access to advanced trading tech as a core benefit.
So what does that actually mean in practice? What kind of tech are we talking about?
Well, we're talking about getting access to what are often called expert systems.
Okay.
And our source even gives a couple of specific names, like Faida Neural Titan 1.70 EA.
Sounds pretty intense.
It does. And Faida Profit Matrix 5.90 EA. Yeah, a bit sci-fi sounding maybe.
A little bit, yeah.
But the fundamental idea is that these are, sophisticated bits of software, computer programs.
Analyzing the market constantly.
Right. News, charts, price movements, all in real time. And this allows for incredibly fast trade execution.
Faster than a human could manage, presumably.
Oh, for sure. And it's also about taking human emotion out of the picture, sticking to disciplined, preset strategies.
Which can be tough for anyone, especially when markets get choppy.
Exactly. That's where it gets really interesting. In volatile markets, having that speed and unemotional decision-making that could potentially offer a significant edge.
It's the kind of capability that used to be more for the big institutional players, right?
Historically, yes, much more so.
And connecting this tech advantage, the way these services structure their fees often seems designed to align their success with the investors.
Yeah, that's another really notable point, the performance-based fee structure.
How does that typically work?
Well, generally, and our source confirms this model, you only pay fees after your account has grown past a certain point.
A profit target.
Right. The example given is 30% growth from the high watermark.
Okay, the high watermark being the previous highest value of the account.
Correct. So they only get paid after they've generated substantial new profit for you above your previous best.
And how does that structure really align interests? Seems pretty clear, but worth spelling out.
Well, it's quite direct, isn't it? If the service provider doesn't help you hit that profit target, that 30% growth in this example,
They don't get paid.
simple as that. So their incentive is, directly tied to making your money grow.
Makes sense.
And the source also mentions transparent profit sharing arrangements. So the idea is you have a clear understanding of how fees are worked out.
No hidden charges, ideally.
That's the aim. It's very much a we only win if you win kind of setup.
Okay, so beyond the tech and the fees, another plus seems to be the flexibility and the control that you, the investor, keep.
Absolutely. That's a big one. You usually don't need to switch brokers or anything like that.
Keep your existing account.
Right. Keep your setup. The process involves giving these automated systems limited access, just enough permission to trade on your behalf.
And this seems crucial, you keep the master password,
Yes,
it,
that's the key. Ultimate control stays with you.
meaning you can monitor everything.
Totally. You can log in, see exactly what's happening in your account anytime you want.
And you can pull the plug if needed.
You can revoke those trading permissions if you ever feel it's necessary. You're still very much in the driver's seat, even with the automation doing its thing.
That sense of control is definitely appealing. However, let's pivot a bit. Our sources are also very clear about the risks involved.
Yes, important to cover these thoroughly.
Let's start with market volatility. How does that affect these systems?
Right. Well, even the smartest algorithms can get, caught out by really sudden, unexpected market swings.
Things no one saw coming.
Exactly. Think about it. These systems, they learn from past data, right? They operate based on preset rules and conditions.
So something completely unprecedented.
Might not be in their playbook.
Yeah.
They might be great at spotting trends based on history, but predicting those really rare black swan events, that's still a massive challenge for any system, automated or human.
Okay, so market risk is always there.
Yeah.
What about the technology itself? Are there risks there too?
Oh, absolutely. Technology isn't perfect, is it? As much as we rely on it.
Glitches happen.
They do. There's always a chance of, say, bugs in the software, or maybe internet connectivity issues that disrupt trading.
Or just simple system errors.
Yeah. And these kinds of technical hiccups could lead to delays in executing trades, or maybe errors in the trades themselves.
Which obviously could impact your results.
For sure. It's just a reminder that even really cutting-edge systems aren't immune to tech problems.
Now, perhaps one of the most critical points raised in our sources concerns the regulatory side of things. Or sometimes the lack of it.
This is really, really important. We need to be very direct here.
Okay.
Our source specifically states, quote, Faida Ventures Ltd. Is not a regulated entity.
Not regulated. So what does that actually mean for an investor using their service?
It means, practically speaking, that you take on a much bigger share of the responsibility.
Responsibility for what specifically?
For monitoring your account closely, for keeping track of the trading permissions you've granted, the usual safety nets and oversight you might expect from a regulated financial firm.
They might not be there.
They likely aren't in this specific case, according to the source.
So the onus is really on the individual investor.
Massively. While a service might aim for transparency, the ultimate job of staying informed, managing your risk actively, that lands squarely on your shoulders. It's just a different ballgame without that regulatory oversight. You effectively become your own compliance officer, in a way.
Right. So given all this, the potential benefits, the technology, but also these very real risks, how should someone think about this? How do you approach that balancing act?
Well, I think it really boils down to making informed decisions, like truly informed.
Understanding both sides of the coin.
Exactly. You need to grasp the potential of the technology, how it could maybe help your trading.
But also be crystal clear on the risks involved.
Mhm.
Market risk, tech risk, regulatory status.
Yes. And our source suggests thinking of these services as maybe one part of a broader, well-diversified investment strategy.
Not putting all your eggs in one automated basket.
Definitely not. It's not a magic bullet. Staying vigilant, keeping up with market trends yourself, that remains crucial.
It does feel like we're seeing a bit of a shift
Yeah.
in the investment landscape, though. Technology playing a bigger role for individuals.
I think that's a great way to put it. It's like our source says, these managed account services could represent a kind of new era in retail investing.
Where tech and human oversight potentially work together.
Yeah, that's the potential sweet spot. Focusing on, transparent models, performance-driven fees, but always with a strong emphasis on managing risk yourself.
Leveraging the power of algorithms maybe, but without totally giving up your own control or responsibility.
Precisely. It's an interesting balance.
Okay, so let's try to wrap this up. What are the main takeaways?
Well, we've seen that these managed account services offer some pretty appealing things, right? Access to sophisticated trading tech.
And that performance-based fee structure, where the only win if you win, that's attractive.
Definitely. But, and it's a big but, it's just as important to recognize the significant considerations on the other side.
Like market volatility algorithms aren't magic wands.
Right. And potential tech failures are always a possibility.
And critically, the regulatory status. Knowing that a provider like Faida Ventures Ltd., based on our source, is not regulated.
Which puts much more responsibility back onto you, the investor, for diligence and monitoring.
It really does.
And that brings us to, I guess, a final thought for you to mull over. In this financial world that's getting more and more automated,
Yeah.
How do you, as an individual investor, find that right balance, between embracing the potential of technology
Which is exciting.
and recognizing the absolute need for your own due diligence, your own careful research, and taking personal responsibility? What's your comfort level with actively overseeing your investments within a system like this one?
That's a really good question to ponder. Definitely something to think about personally. And for those of you who do want to explore this further, obviously doing more research into managed account services generally is a good idea.
Especially focusing on understanding the regulatory aspects for any provider you look at.
Absolutely. And you could also check out the social media links that were provided for Faida Ventures Ltd. That's youtube.com/Faida Ventures and facebook.com/Faida Ventures.
If you want to see more directly from them about what they offer.
Right. But always keep in mind what we discussed about their regulatory status
Hmm.
based on our source information. That context is vital.